But as always, commodities in focus with the oil price diving more than 3%, hitting a fresh one-month low as scepticism rises around the likelihood of an OPEC production agreement. This despite OPEC officials approving a document which outlines their long-term strategy. Now, the approval shows that members are on the way to achieving consensus. However, weekend talks in Vienna achieved little else, with the group failing to agree on any concrete details. It comes as OPEC's oil output is set to hit another record high in October as Nigerian and Libyan recover, their oil markets recover from disruptions, and Iraq boosts exports. Now let's get across more of this. Tim Evans from Longleaf Trading Group is joining us live from the CME in Chicago. Tim, great to see you there. Thanks very much for joining us. Now, the crude oil market certainly showing a lot of weakness there today. We mentioned it's all about OPEC at the moment, and a Reuters poll, I believe, showing that the majority of oil analysts at the moment now believe that a production cut is not, in fact, likely to happen at that November 30 meeting.
Yeah, hi, Leanne. Nice to be with you today. Yeah, I had the privilege of seeing the same report, and I mean, my take on it really is, I think oil analysts, are kind of coming around to see the difficulty in moving forward with a production cut, and one that's enforceable. All parties agreed, higher prices would be of benefit, but the compromises that are required to, bring that plan to fruition are a lot more difficult to deal with. And I think we're seeing the realities of that now. And, I think oil analysts, by and large, are beginning to see that from top to bottom.
Now, just whilst we are talking the oil market, because this Baker Hughes deal has certainly been in focus, General Electric, this big mega merger deal that's come through, $32 billion oil business has been created here, and we saw both of those stocks actually rising on this news. So the market's certainly taking it well. Is there concern, though, that this merger could potentially encourage sort of more exploration potentially at a faster rate?
Yeah, this merger, it shouldn't have a whole lot of impact in terms of, supply and demand fundamentals in the near term. However, that could have a significant impact in the long term. If we see aggressive acceleration of exploration activity. One thing to keep in mind is investors focus on a variety of different time frames when they're investing in the market. Somebody who's investing in crude oil today that's looking out, 18 months from now and trying to see kind of what the underlying fundamentals would support, would buy on that news today. So even though it may not have an effect on near-term supply and demand fundamentals, it can have an impact on price for that reason. And I think that explains part of the move that we're seeing today in the crude oil market.
How much has that contributed to the overall move for the market today? We were just sort of going through it then, and the market is relatively flat at the moment, although it's been fairly quiet. How much has the oil move contributed to the session today?
Well, with respect to the equity markets, it clearly has an impact. We've seen a very strong positive correlation with crude oil and U.S. equity markets here over the last 3 months. Any time that we see weakness in energy markets, that typically is carried over into equity markets. Frankly, I think the equity markets obviously performed quite well, given the dramatic sell-off that we had in crude oil. Crude oil is the story in crude oil is kind of working alongside the uncertainty with respect to U.S. elections. So, there's a number of situations that the market's having a discount here in the present that could have a significant impact, in the near and intermediate term.
Yeah, sure. Just on the US election, certainly risk aversion, that risk-off tone was triggered after the FBI said they're investigating these new emails involving Hillary Clinton. The email situation, is that weighing pretty heavily on stocks today?
Yeah, you and I actually talked about this at length last week. The markets are very sensitive to polls. We've seen, as Donald Trump has done better, done worse in the polling, the market has reacted to that. There's been a kind of a negative correlation in terms of Donald Trump's success and the performance of, the broad-based stock market. Obviously the FBI, with their announcement on Friday of last week, that brought a lot of uncertainty in the market. We're not going to know the way this is going to play out until we really go into election day. So the market's going to be on pins and needles and, trying to pay attention to the polls and prediction markets and all the available information to determine, the way this election could, in fact, pan out and the impact it would have on the market.
Yeah, so it's certainly going to control the market at least for the next 8 days, I suppose, and then it just is all dependent on the outcome of the election. What would be, in your opinion, the best case scenario for stocks?
I think the best case scenario for stocks would be, maybe an announcement from the FBI saying that, hey, maybe they got a little ahead of themselves, or something that ultimately at the end of the day is going to benefit Hillary Clinton. I mean, we've, again, for good or bad, or, regardless of what your opinion is in terms of your political leanings, at the end of the day, we've seen evidence of the fact that the stock market is responding better to when Hillary Clinton seems to be doing better in the polls. So I think best case scenario for U.S. stocks would be a Hillary Clinton victory next Tuesday.
Mm-hmm. Now, of course, we have the Federal Reserve meeting coming up this week, and that's ahead of non-farm payrolls there on Friday. No one expecting any move from the Fed this week, but the statement's going to be pretty heavily scrutinised. And I suppose in terms of any changes in expectations going forward, isn't it? I mean, what are you going to be looking out for in the Fed's two-day meeting this week?
Yeah, I mean, the prediction markets are showing about a 6% probability of a rate hike. So, I lean more towards zero. I don't think we're going to see, obviously, anything on Wednesday. But you're exactly correct. I mean, the language that's used in that statement, we'll have to kind of read into that in terms of, what the Fed's looking to do in the December meeting. I mean, we have about a 67% probability of seeing a rate hike in December. So, the market is leaning in that direction. And we'll be looking to see if any additional dovish or kind of neutral or hawkish language is added or taken away from the statement that's produced on Wednesday to get a determination kind of the way the Fed's leaning for the December Fed meeting.
All right, certainly still a number of upcoming catalysts to be watching out for. Tim Evans, really appreciate you joining us. Thank you so much.
Yes.
Tim Evans joining us there from Longleaf Trading, live from the CME in Chicago.